Okay, welcome to InTradeVest. We trade futures. We trade the NQ and the ES on a day trading basis. Let's start off with our disclaimer. Don't trade with capital that you can lose. Trading futures is great, but it can be dangerous. You got to know what you're doing. So make sure you know what you're doing before you get started. And that's what we're here to talk about today, how to properly trade the futures. Here's our disclaimer. All right, let's go over to our chart. See what's going on there. Let's talk about the elephant in the room today, shall we? Okay, so we're over here in our charts today, and most of you know we use a trend direction indicator and a trend strength indicator. This is our 50-yard line, very important over here. This separates the bullish sentiment of the market from the bearish sentiment. And then you have a faster indicator here going up and down with turns through these two lines over here. This tells us the short-term direction. When we look at these the directional indicator, the fast indicator, we're interested in when it breaks the 50, that's of interest, or when it's continuing in an up or a down situation. We call it up, down. This would be a down, trending down in an up environment. The overall general trend is up because it's above the 50, but it's trending down in the fast indicator. So this would be of interest to us when it breaks the 50, not here, okay? Here's another day. Here's the market in a bullish, it's bullish, but it's coming down. I'm sorry, it's probably bearish. It's all below the 50. So it's a bearish day and it's kind of going sideways. This would be a trend, a trade that we'd be interested in. This is 6:30, my time here in California. The market opens at 6:30. And when you see a down, below the 50 is bearish, and the fast indicator is moving down, this would be a good trade. This would not be, and this would be a good trade here, breaks down further. This we would not trade, and here another breakdown. But let's talk about and by the way, when you're doing trading like I am every day, these are the situations we deal with. Yeah, it's great to get some of these days when it's nice and looks like it's an easier day to trade. Maybe there's a bigger move going on, a little more range, and you're thinking to yourself that these are easier days to trade. But the fact is, you don't really know what that day is going to bring, and we as traders are forced to trade every day. We're looking to make some money every day. And if we don't know what we're doing on these tight range days, we're going to get whipsawed and we're going to lose money. And that's what most traders experience. They get an easy day, one big move, and they get excited that they caught a winner. I'm trying to find a really easy move here for you so you can see what I mean. Okay, here's a good example. From our perspective, here's an easy trade, okay? The market is bouncing around the 50 over here. We're not taking this trade based on our rules, although we will take these trades. I'll get into that a little bit later, these short trades here, quick trades. But these trend trades we're not going to get into, okay? But this one we will. This is a good trade for us to get into because it's in the bearish area. The dominant trend is down and the short-term immediate trend is down. Trend direction. Everything is down here. We call this a down move. So yeah, we want to jump on this and we're going to get in at around 33.30 on the ES and we're going to exit very naturally around 33.08. Very easy trade. Okay, no touching with the brown dotted line here. Moves down, finally crosses over. So we made ourselves 22 points. It's $1,000, more than $1,000. That is what we call an easy trade. But they don't happen every day. Every day we're looking at different situations, and we as traders have got to make a decision almost all the time what to do. Do we take this trade? Do we take that trade? And we literally have moments to make that decision. No wonder over 90% of day traders lose money. Okay, this is the problem. We have to have a system that works in all conditions. So what are some of the, what do I call the elephant in the room as far as trading? What's the elephant in the room? How many of you have embarked on a trade that you felt was going to go in your direction? You looked at your indicators, you looked at everything, it all looked good, you get in, but guess what? You're too late. You entered too late, and the trade goes against you, or you barely make anything, and you think it's going to run and it doesn't, and it just goes against you. How often does that happen? How frustrating can that be? You know, we're working on a 5-minute chart. So some traders, they think that they're going to overcome that by, you know, getting into maybe a 2-minute chart or a 1-minute chart or Renko bars, because there's that slippage. You enter a trade, okay, on a 5-minute basis, you wait for the trade, the bar to close, and you enter, and all of a sudden it's too late. And time again, you're frustrated. That's the elephant in the room. And you got to address that if you're going to be a successful trader. How do you jump on a trade that you're getting in at the beginning of the trade, not toward the end of the trend or at the end? You know, how do you deal with that? All right, we have an answer. And we talk about this in our trading room, and we invite you to come in, take a 7-day trial with us. But there's a lot of situations where you really have to, most situations, you have to know, this is my time to jump on the trade. You've got to have that split-second awareness that is my best interest to jump on the trade and get in. And at a point where if you're right, the trade's going to run in your direction. But if you're wrong, it's not going to go massively against you. You might end up breaking even, or maybe even making a point or two if you're in the ES, something small, and then you're out before the trade goes against you. You've got to know this, because making money as a good trader, okay, if you're going to be a good trader, you have to be consistently making money. These little move, the entrance or the entrance to your trade is very important. It's very, very important, because a wrong entrance could mean a bad trade. And you know how fast the market moves. We see it. It moves very quickly. Against us, for us, against us, for us, up, down, up, down. It doesn't just always move in a nice trend way. It oftentimes will whipsaw us. And if we don't know what we're doing, we're going to get whipsawed, so that even though we make a good trade every day or 2 or 3, these whipsaws psychologically damage us. They cause us to lose money. They cause us to blow up our account. Could you imagine for 1 minute how good your trading would be if you could limit your losses and make a loss into a gain? So when a trade is tight, you're not the one getting whipsawed, where you can make money on that trade and get out. And when the big one comes and the better one comes and the better wave comes, you make money, which is what you're here to do. If you're a surfer and you're going out to surf, you don't know which wave is going to be the one that carries you in. You don't know. You look at, if you've ever observed a surfer and you watch them, they're out there and they're swimming out there and they don't know if that one wave is going to be it. So oftentimes they get a false start. They get up on the wave and it goes nowhere. And they go back out again. They get up on the wave, it goes nowhere. Sometimes the waves go nowhere all day. And these guys don't even catch one good wave. But why do they keep doing it? Because they're looking for that great wave experience, just like a trader. We're looking for a really good ride. So it happens, otherwise we wouldn't be in the business. But if we take too many whipsaw trades and getting mosquitoes, like constantly, getting a little bit of blood, if we let these small trades get the better of us and whipsaw us, where we take losses, it's going to really help hurt our performance. We won't be able to continue. We won't be able to continue if we're always taking those losses. So you have to know the system for entering the trade correctly. And correctly means early, not late. Early, at the earliest possible time, not late. So you have to be on your game. You have to know that this is it. I've got to get in now, because getting in at the earliest part of the wave is the correct way to trade. It's going to cause you the least damage if the trade goes against you and there's no trend to follow that entrance. If the wave just peters out, you're not going to be left holding a losing position. You might make a little bit, you might break even, you might lose a drop, but it's not going to be the type of loss that you would have experienced if you waited for that bar, or if you waited for the bar to close, or you waited for an extra 5 minutes. If you're on a 5-minute chart, that's the difference between winning and losing in this game. Now remember that, because when you look at charts, they move like this. They move up, down, up, down, up, down, and they have sharp turns to them. Turns that are very sharp, that can cut your neck. It can, these turns are very quick. There's a lot of money being poured into the market and they make very fast turns. And so you have, and I have to be on our game and nimble if we're going to succeed in trading. So that's the elephant in the room I'm addressing today. And how we enter the trade before others is what we do in our trading, in our trades. That's why we're successful. We enter early, not too early, but at the earliest confirmation that the trade looks to be a possible winner. Let me give you an example. This is the ES. This is the 50-yard line. I call it the 50-yard line. This is the neutral zone separating the bullish sentiment of the market from the bearish sentiment of the market. So when this line is, when the red line is above this green line, the market is bullish. When the red line goes below the green line, the market is bearish. This is actually a very good line to trade. This is the trend strength moving up, and it's red above the blue. Red means negative, blue means positive. Blue means positive. We've got a nice red line moving up, so this is bearish. Okay. Now, entering this trade is very important. How often do you see a trade that you think is going to win and it starts off with a big bar? You have a big bar and you're thinking to yourself, oh God, I mean, my system just told me to get in at the close of this bar. That's a big bar, relatively speaking, to the other bars. The high of that bar is 04. The low of that bar is 86, 386. That's almost a 20-point move right there in the ES, right there. Okay, so if I get in at the close, which is 90, 91, I'm already getting in 14 points from the open, from where the bar started. And I'm getting nervous. Oh my God, I don't know if this thing is going to continue down. It might just stall. It might go back up. I've already lost a lot of the, a lot of the momentum is already maybe gone. And that's what every trader thinks. When he looks at his system and it says get in, and they just passed up a big bar here, you're going, I don't know. I got doubts about getting in right there. I'm not sure about that. How did that happen? And it happens over and over and over again. You see these big bar moves and you're thinking it's too late. And then people tell you, oh, no, it's not too late. Get in, it's okay. But it's not. A lot of times these things do reverse. Like here, it reverses up way up here before it comes back down. Way up here. How many of you could sustain this type of trade? You enter short here, and it's climbing, it's climbing, it's climbing, it's climbing, and you bail because it's going against you and you're losing money. You bail. And then it returns and comes down. And then you kick yourself all day long. I should have stayed in. I should have stayed in. What happened? Why did I get out? What an idiot. It's all red here. All the bars look red. I should have stayed in. Because those bars could have turned blue. You do not know. You were right to get out. That's the thing. How can we prevent this? As traders, we don't have unlimited capital. We need to make moves that work in our favor immediately. We don't have the luxury of waiting and letting it move against us. 1, 2, and letting it move in our direction. Let's say we got into this trade here. Oh, there's a lot of downward move here and I get in. I'll say, I'm just going to wait for the break of this bar. I'm over here. I get into this bar here, down here, and it moves against me. Let's see. Closed here at 82. Up here, it's at 97. That's 15 points against me. That's $750 with one contract. And I'm going, oh my God, I can't handle this. This is too much. This is just too much. I know it's bearish. I know it's telling me it's bearish, but it's awfully close. It could flip over and become bullish, and I could lose my shirt. What am I going to do? I don't know if I can handle this. If I can handle this today, they tell me I'll become stronger and a better trader, and I'll be able to deal with all this pain better. But if this is trading, oh my God. And thank God it moves back in my direction. But I'm so nervous from this trade here, from waiting this long. I'm going, oh my God, I'm just going to get out when it breaks even, which is right over here, right where we got in. We don't even wait for the rest of the trade. This is what happens in trading for most day traders. There is only one way to deal with this. We don't want to be in this situation here. I don't want to be in this situation here. I don't teach anyone to be in this situation here. I want to be in this situation. If I'm taking the trade, I want to be at the beginning of this bar, at the open, not at the close. This open here was 94.50 and it closed at 76. That's where you make your money, right there, not there. This is frustration. This is not trading. This is not good. This is good right here. We have to get in at the beginning of a bar, not later on. So this is the difference between winning at this game of trading and losing. Winning and losing. That's it. See if I can make a connotation, a notation here. Let's see if I can do something. Okay, there we go. Okay, right here, let's say this is where we want to get in, the beginning. Okay, we do not want to trade this and then make it come around over here. This is hell. We do not want this. We want this way up here. And then we're done. We're out. Okay. Let me clear this up over here. Oops. Okay. Now, come on. Where are you? There we go. Oops. Come on. There we go. Now, this here, oops, why is that not working? I had it before. Gee, I'm sorry. Trying to do it again. And for some reason, I apologize. I can't get this to work for me, which is not unusual. So I'm just going to have to point. We can do this. All right. Well, doesn't seem to want to cooperate. All right. Here we have a bearish market. It's bearish below the 50, and our fast indicator is telling us it's also on a short-term directional basis, it's bearish as well. Plus we have a red signal here, red strength, picking up negative strength. So this is a good trade right here. We would take this trade in our trading room, okay? And if you look above here, that's where this trade is. It starts right here. Interesting, huh? How it coincides with this bar right here. We didn't come in here. Our system didn't tell us to come in here. It told us to come in here, which is really the same as here. No difference. But we didn't go through all this pain. We waited. Let everyone else suffer the pain. We didn't suffer the pain. We got in right there and we took this right on down based on this signal right here. Okay, but let's go back to the, let's see if I got this. I'm gonna try this. There we go, something. All right, we got something going on here. All right, so let me show you right here. Okay, this is a trade we're interested in. We talked about this earlier. This is a trade we would do in our trading room because the market is starting to pull down right here. Look at that nice movement down in the market. And we're picking it up right here. And the market is our indicator is telling us that it's just starting to become bearish right there. Seriously bearish. But we talked about these moves. These are some big moves down. I do not want to get caught in taking a trade after this big move. Let's see what would have happened if we had followed our, okay, let's see what would happen if we had followed our system. Okay, right here, right there, we have still our bullish. Okay, we're still bullish right here. On the close, we're bullish. This bar here did not give us an entrance. It didn't. But this bar did on the open, right here on the open. The open, we want to take the open, which is 91. The high was 98. We took 7 points of heat. The close was 94.50. There's some heat going on here. But the next bar came down and we did really fine. And we made plenty of dough right there. And this, by the way, is not an ideal entrance for us. Still scary, still causing us some sweat. A good trade doesn't have to cause us any anxiety. We might have even bailed out over here with a 3-point loss. No harm. We would have made plenty of money on this move. If we got out here and took a 3-point loss, there's no harm, because the market could have turned around on us right there. We don't know this bar is coming next. Nobody does. Maybe someone does, but it's illegal. Okay. Let's get rid of this and try another bar over here. Hope you're getting something from this trading. I'm really trying to show you something important here. Okay. Now, here's something very important I'm going to tell you about our trading. Okay. If we get in based on our system, and we'll teach this to you, if we get in and we don't see movement in our direction, we are out. I don't care, we're out. On that trade, we're out. We want to see some movement on that trade. We feel that if we're coming in right when the market is changing direction, there ought to be some push. If there's no push, it can flip around on us. We don't want to take that chance. We'd rather not. This is all about managing risk, isn't it? Our system is telling us that right here on this bar, there is a trade. So the difference between waiting for the bar to close and waiting for the bar to open is the entire difference in the trade. Let me. Where are we? Right over here. Okay. So this is the bar right here, and we entered at the open, not the close, because as soon as the next bar opened on a 5-minute basis, we had movement across from bullish to bearish. So we didn't wait. We did not wait for this bar to close. We took the open on this bar, which was 43.75. We went short, and this bar closed at 38.25, which is just off of the bottom. So we took in over 5 points on this bar. If you're trading one contract, you got in and you made $250. What if you waited for the bar to close? You closed at 38.25. Now you're into the next bar. The next bar is closing at 40. The next bar is closing at 40. The next bar is closing at 40. And all of a sudden, you entered and you're not making any money. 5 minutes, 10 minutes, 15 minutes, 20 minutes, 25, 30, 35. All this time's moving and you haven't made any money on your entrance on this trade. And this is what happens all the time with traders. They entered wrong. There's nothing crazy about, that's not the market that's wrong. It's not even the indicator that's wrong. It's when you enter. And so as soon as we see a negative, as soon as the bar opens and it's negative, I'm not waiting for this thing to flip over. I'm taking the trade right there at the open. I'm in going short at 43.75. And look at that. The volume also was negative. It turned out negative. I didn't know that, but it did. So we made our money on that bar and we're out. We're done on that bar. We are done. We made money and we're done because there's no other reason to stay in it. Right there, we're done. Now, the market moved sideways, didn't know it would, tried to go up here, didn't make it past the bearish 50-yard line, didn't make it, didn't break our blue line here, which is the slower indicator. I got a fast and a slow, didn't break that, didn't take the trade, but right here, we have what we call a continuation trade. Market moved down here, not really, but our indicator did. Flipped a little bit, tried to get positive, didn't. Big bar down right here. But this is called a down move. Okay, what do I mean by that? We're already in bearish territory. This trade here is firmly in bearish territory because the line, our bearish line, is already broken here, down here, hasn't touched it again. So we're well into bearish territory. And we have a continuation of a mixed trade. This is what I call a mixed trade, but it's a continuation. So this is a powerfully strong bearish signal. We get the same thing can happen on the bullish side, but this is the setup for a bearish signal. We see a big bar here that closed, but we're not as worried because we have a very strong bearish possible move coming. So we take it. We enter on the open of this bar and we take it all the way down till our red line crosses the fast indicator down here. This gave us, we entered at 33.30, we exited at 33.08 and a quarter. We made ourselves just shy of 22 points. So we made $1,000 on this trade, $250 on this trade. That's the kind of trading that we do in our trading room. Here we go. Again, the market is now trying to find its way back up into bullish territory. We don't take this trade. There's a turn right here in the market. We identify it, but it's a bullish or it's a bullish move up in a bearish territory. We call this an up-down move. Up, down. It's mixed. I don't know if it's going to make it up here. Didn't here. It might not make it here. We don't take this trade. But once it starts to break right there, the 50-yard line, we have an interest. We have an interest. What do? Our trade, our system is telling us, and we'll teach you this, that this trade here is a good trade. This bar, let me identify that bar. Oops, right there, that bar, right there, okay? That's our trade bar right there. And so, let's see, oops, no, it's actually this bar. I'm gonna have to erase that and give you the right bar. Okay, I'm just going to point to it so you can see it. It's this bar right here. That's the bar. That our system is telling us to enter on that bar. Okay, so we enter at the open, which is 33.20. and it closes at 33.28. We wait for the close. We just pocketed 8 ES points with no pain at all. And we're out. That's $400 right there on that one bar. Our system said, hey, we're going from negative bearish sentiment to bullish sentiment. Let's get in. We don't need to wait. We jumped. As soon as there was a jump on this line into the bullish territory, at the open of that 5-minute bar, we jumped on it. If we waited, look what happens. Doesn't go anywhere, the market. We get caught in the same problem that every other trader is getting caught in. It's going sideways, sideways, sideways. The momentum is gone. Just when we get in at the end of this bar, we're thinking it's going to continue, it dies. And this is why 90% of the traders lose money, because they didn't get in at the beginning over here, they get in at the end. They waited. You got to have a system that gets you in at the beginning of these trades. This is the difference between making a living and not. You either get in at the right time or you get in at the wrong time. You come in here and you make $400. You come in here and you lose $400. What's it going to be? That's the only way that you can trade successfully. Getting in at the right time. Now, this is getting kind of close to the closing time. We'll have a half an hour before the market closes. We wouldn't take this trade. But if it was any other time, this would be a good trade to take. Slightly bearish here on the continuation. Let's see. Just a drop. I would take it. It's really a good continuation. This is a mixed trade, we call it. Here's a continuation. It hasn't penetrated the blue line, and now it's going to continue. So this pullback is not a bad pullback, is what the system is telling us. It says, okay, it's a normal pullback. Let's get in as soon as we can, which would be right here at the open, and take this up. And if it wasn't close to closing time, this would have been another good trade. This is how we trade our system. So if you want to learn how to be a really successful trader, where you can put on multiple contracts, where you can beat the market, where you can be on top of the market, you need to come into our trading room and get your trading refined and honed properly. Using our trading system, we'll teach you and we'll show you how you can properly trade. Thanks for listening and best of luck trading. We'll see you in our room. We'll see you in our trading room. Oh, I'm going to tell you how to get to our trading room. Thank you. Forgot about that. Let me get over there. Here we go. Okay. So our trading room is in TradeVest right here, .weebly.com, in tradevest.weebly.com. And you can go to this website, our website, and we have a whole variety of options. You can have auto trading done, auto trading signals done for you through our broker. You can have just the signals sent to your computer, which is not easy. I got to admit, this is maybe something that is not easy to do because you've really got to act fast. Or you can come join our trading room. And we do screen share and live trading, and just like we're doing now. So auto trading is also a good option, because when we take our trades in the trading room, not every one of the trades, but a lot of the trades we give over to our auto trading brokers. So you'll get some of the trades that we take if you just do one of the auto trading. Auto trading, you don't have to be in a trading room all day. You don't got to worry about the trades. It's all done for you. But you won't get all the trades. If you want to sit in on the trading room and you feel more comfortable about being a full-time day trader, then you want to come into the room and trade with us, because we'll take more trades there and we'll show you what we're doing. We've got a great track record. You can see it live on our website. It's updated every single trade we make. We're doing really well. These are all positive months using one contract. Every single trade is taken, is shown here in our trading room. that we do. Everything is listed on our performance right here. You can see it all. And let's go to our website and check it out. These are the ES trades. I mark them with an X. These are the NQ trades, date, the entry, long or short, the actual price, the points that we gained or lost, how we're doing for the month. Everything is listed there. Dynamic. Every single trade is updated for the month. So once we make a trade, the monthly total is also updated. All right. You come into our trading room. First 7 days are free. And come and check us out. See if this is a system that you can get behind. I don't think trading is for everybody, to be honest. You might be better off just doing the trades, the auto trading, and we have a different website for that. When you go to our website here, okay, this will be changed. This should have been changed already. We have a different website for our auto trading. And so we'll automatically take you to the other site. But if you want to trade on your own with us in the trading room, the first 7 days, here's probably what's going to happen. Come into the trading room and check us out and see if you like the way we trade. It may be for you. It may not be for you. You have 7 days to check us out. And if you don't like it, you can just say, okay, thanks, but goodbye. If you do like it, come on in and trade with us. And you can sim trade on your own. You can paper trade. You can talk with me. We can discuss it until you understand what we're doing and how we do it. Okay. And then even after you do that and you're trading with us, you still may feel uncomfortable because trading is a high pressure situation. And it really isn't for everyone. There's a lot of money to be made, but I've been doing this for a long time. And I truly understand that it's not for everybody. So what may happen is someone who's experienced, who's used to trading, they may just stick with us and love it. And we'll have a nice room filled with good traders, which is fine, which will also bring up the energy level for all the traders. But if you feel that, you know what, trading, you guys have got it. I like the way you're trading and making money, but I can't do it. Then go to our auto trader, our broker. And when we make a trade in our room, I send that trade in real time to my auto broker, my broker. And he trades that for all of the clients who are subscribed to our auto trading system. So I don't give him every trade I take because with auto trading, I just want to show our clientele a decent profit for the month. But when you're in our trading room and we're there in the trenches together, we're going to take more trades because we got to be in quicker, be out quicker. There's a whole different rhythm. But either way is fine. It just depends on you. Okay. If you have any questions at all, give us a call, send us an email, send us a message. It's all on our website. We've been doing this for 30 years. I believe that trading futures should be a part of everyone's portfolio. If you're looking for income, and just for immediate income, this is great. If you're looking to build net worth, this is great. This is good for people who are looking for income. They're retired, people who are, have money in the S&P, but they want to play a little bit and have a little bit, to work with that might produce even better results. Because honestly, what you'll find, and I wrote it here on our website, is because futures are so highly leveraged, what you can do here in terms of making money might take another investment 10 times the size. So with a small futures account, and we recommend about $10,000 to trade our system, you could be making more money trading a $10,000 account with our future system than, let's say, a $100,000 stock trading account or S&P account. There's a lot of leverage in futures. So if you trade it correctly, you can do extremely well. All right, that covers everything. So I appreciate your listening in tradevest.weebly.com. Thanks.